Hello and good evening to all our mentorship traders. 18th of June 2021, Friday evening, 9 p.m. Indian Standard Time, and we are back for yet another session of Mentorship Invest. Let's talk about the markets, the sectors, and then we'll get along with our trades. Well, quite an eventful week, definitely, and one crazy day today. We were being cautious and careful for the last, I would say, couple of weeks, primarily because of the price momentum divergence that was pretty obvious and clear on the daily charts of Nifty 50. This is Nifty. And so we had a decent run up, an extended run up, which took us to an all-time high. Then it started to create some decent divergences, based on which we were on the cautious mode, and it did play out, the sell-off. We were hoping for an inside bar, an evening star, which was there. But what we saw today was quite disturbing in terms of the underlying volatility of the market. So let's break it down. Let's see where Nifty is and what can we expect. First, we are in an uptrend across the intermediate and the long-term time frame. If we talk about the short, medium, long-term kind of time frames, then in terms of the medium-term time frame and the long-term time frames, we are in a very strong uptrend. And the levels of 16,500 on the upside is very much likely. If you recall, we've been saying that before 16,500, there has to be some kind of a correction, which will create headroom on the upside. Now let's take a look at this chart. This is the daily chart of Nifty futures. So what happened today was, in terms of high-low, it was quite a long bar. It was, I think, over 300 points on a day's range. The short-term supports of 16,500, 650 held on a closing basis, but when you have a sell-off which took the market all the way down till 450, it's not justifiable to say that it held on a closing basis. It's all gone. Two things that I mentioned in tonight's write-up are, one, the short-term trend. If you take a look at the 75-minute time frame, the short-term trend of the market has gone down. We have a roll down on the moving average after quite some time, and we've seen some decent amount of selling also. Yes, the bounce back was sharp, but the short-term trend is down, number one. And it needs to move above the 750-800 mark, which is close to the opening highs of today's trade. And then only can we say that, okay, it has sustained well, or else a follow-through sell-off, or else a next leg of move on the downside should not be discounted, should not be completely neglected. Possible. This will get some clarity early next week. Second damage, what it has done, it has led to huge spike in volatility, or in terms of the average length of the candlesticks have spiked up. What this generally means is we have moved into a volatile uptrend. Earlier we were in a low volatile uptrend. Now we are in a high volatile uptrend state of the market, which in simpler words means that getting stopped out and whipsawed in this kind of a market environment, irrespective of the direction of the trade, long or short, is very high. Okay, so we need to be a little careful. Levels on the downside, if we see follow through sell-off next week, then of course the recent lows, which is close to that 450, and further down 350, 450, which I've marked here, we've got a gap up here. The bias, the long-term bias for the market stays positive. There's no doubt about it. But we needed a short-term correction for momentum for further upsides. And we've had it. We've had a pretty decent high to low correction. If we consider 450 as the low, and we had almost 900 on the top. So we're looking at a 500, 550 points correction on high to low. It's just that the volatility with this correction was very, very sharp, very, very high. Second, all throughout this run up from the lows of 22nd of April, every correction has been one-legged. I think I did talk about this in our last Friday session. I don't recall exactly, but let me just quickly repeat again. Every correction since April has been one-legged, and it led to a bounce back to a new high. When such simple corrections goes through, generally it follows through a complex correction, a slightly deeper correction. Or even if it doesn't lead to a deeper correction, it might lead to a deeper time-wise correction. It might probably stay in a range and buy some time. We should be prepared for both. It can lead to a consolidation considering the kind of sharp bounce back that we've seen today. It can lead to a second leg of correction. This some clarity we will get early next week, or by the time we do this session next Friday, we will have enough clarity. So be careful. I think all of this is leading to only one point for us as a short-term traders. You should be careful. Your long-term portfolio should be fine, but the short-term portfolio, you might have got stopped out in your long trades thanks to this movement that we have had over the last 3 days. This is completely fine. This is part and parcel of the game. But all eyes should be 15,600 on the downside and 15,800 on the upside. My take is I sense that it's going to stay first range bound. And considering that we have a roll down, we have a short-term trend reversal, the index will probably try to shrug off a little bit more room. Probably it will come down a little bit more before it makes a new high. So Nifty, short-term downtrend, long-term trends are positive. Volatile market, stay careful, stay cautious. 600 on the downside and 800 on the upside. Bank Nifty relatively underperforming because it's way away from its all-time highs. But the good level is in terms of the support, the 33,900, at below that 34,000 mark has acted well as a support. It has been the highs of March, April, little bit of mid-May, and now today's low. The short-term trend is down, of course, but the intermediate trend is still holding well. If this level holds well, then we can see a revival of the banking stocks, SBI, ICICI Bank, Axis Bank. These stocks should be, you should be keeping a closer look at them. If today's low holds, chances are there, it will hold. FMCG performed late, but it did perform. We spoke about the breakout that we saw last week, and Hindustan Unilever was the stock which took care of it. A little bit of Jubilant Food also. IT also one space that held pretty well. These are the daily charts. You don't see much of a correction. This is a weekly chart which is at a life high, and IT is performing pretty good. And I think every drop from here on can be looked as an opportunity. Pharma is a little precarious. I use the word precarious because of this. Okay. Generally, it's kind of tending some kind of a broadening kind of a behavior on the prices. So this kind of a range bound activity might see some consolidation. The stock may stay range bound, but if this low breaks, I don't think so it's going to break eventually. But if it breaks, then we might see some amount of damage in the pharma. But overall, the trend is so strong, it's very, very difficult to call a reversal right now. It's more likely to be a short-term correction, which will lead to a bounce back. Private sector banks. Now, the bank Nifty, if it has to, sustain, then it's the private sector banks, especially Axis, ICICI, and a bit of HDFC, which needs to support the index. SBI has played its role. PNB, Bank of Baroda are fairly volatile. We cannot rely on them too much. So ICICI, Axis Bank, and HDFC, all eyes on them. Kotak is still relatively underperforming, so can't rely on that too much. Do keep a close look at these two stocks. And from the finance, it's Bajaj Finserv and Bajaj Finance performed really well, and I think that there are further upsides. They are the strongest stocks. Now I'll quickly talk about the auto, then move on to our trades. Now, auto is another sector which has not managed to match the Nifty to an all-time high. All these sectors will try their best to do a catch-up game, those who are still away from their all-time highs. Now, auto, we've got a decent correction. This is a decent correction in an uptrend. And if these lows hold, then we can see a nice bounce back coming up anytime soon. So all eyes should be on your two-wheelers, Bajaj, Hero, and the four-wheelers, you should be looking at something like a Maruti. M&M struggling within a range with very high volatility. So I think Maruti stands out better alongside the two-wheelers of Bajaj Auto and Hero MotoCo. And of course, there is Tata Motors as well. Having said this, I will just quickly take a look at Tata Motors. Strong trending counter comes down, hits the averages. The erstwhile highs are likely to act as lows. So if this works out, then we can get a nice move coming up next week. So there are sectors, and within the sectors, there are stocks, Nifty 50 stocks, which can support the index, which can help the index take out the 15,800 and further up. So the underlying bullishness should hold. It's just that the volatility has been such, has been the level of sell-off and the bounce back, that short-term trading, short-term traders should be a little bit careful, should be in two minds and not get carried away by the flow. Let's wait out the first couple of sessions next week, see whether it's 600 or 800 first, and then accordingly play out. But overall bias stays positive as long as the medium-term trend holds. We should be more of buyers on a dip rather than going completely into a bearish mode. All right. So let's see. That's for next week. But as of now, I hope this volatility did not affect your portfolio too much. Now let's talk about our medium to long-term positions.